The dollar index has been on this huge recovery after a very long period or extended period of downwards momentum, and this is due to a number of factors, and it looks highly likely that we might see a continuation of this. My name is Samson Mzera, and today we'll be discussing both the euro, the dollar index, and gold to see what is happening in the markets. So be sure to share, subscribe, and like this video. The extended uptrend on the dollar index has been no surprise. This is because the biggest component of the index, which is the euro, has been on a downtrend. If you look at the euro USD, we're seemingly approaching that imbalance zone that is below price, and we might break that supply zone if factors stay constant. And this is because we've seen, for example, the inflation rate for the eurozone come in lower, the German inflation rate also come in lower, and other factors such as the PMI numbers also coming in lower than expected. And this is now making the market fully price in an interest rate cut come Thursday this week. We expect a 0.25% cut in the interest rates from the current 3.65 to 3.4%, and this the market has already fully priced in. So any reaction that comes in will be as a result of continuous news that we are seeing from the eurozone. Any further downside on the euro will be as a result of either commentary that is coming in from the ECB president, or if we see news again from things such as the tensions, the environment around sanctions, and also the US election that is becoming a risk event for the eurozone. On the other hand, things have been looking pretty okay for the dollar index. This is because we've seen things like inflation coming in really strongly, and this has supported the thesis of the Fed being less aggressive with the cuts and doing smaller and smaller cuts as we go forward. This implies that we might see interest rates being cut at a slower pace in the US in comparison to other major economies such as the euro and the UK. When you look at the dollar index, we've staged a very strong rally, and it seems as though we might experience a bit of volatility as we head into tomorrow's ECB meeting, but that might be tamed given that we might see very little downside on the dollar index. And this also trickles down to things like gold. We see that it has formed this consolidation, and it's because of mixed factors in the demand and supply areas of gold, in the demand and supply dynamics of the metal. For example, we do expect the dollar to come in strong, and that ought to result to gold coming in lower or dropping, but we are not seeing that drop in gold, and this is because we are seeing a bit of demand in the metal because of the tensions and the uncertainties that are going around both in the Middle East and now in Taiwan. So we are seeing, for example, in the Middle East, tensions are still taking an uncertain route, and also now that China has begun military exercises, then we're also seeing a bit of tensions on that part of the world, and this is making investors very risk averse. That is why gold has found support, and it has not weakened against the dollar as anticipated, and that is why we are in that elevated zone. Looking at the gold chart, last week we were in some sort of flag formation. We did attempt to go lower given the dollar strength. However, we saw a full recovery of that, and now we are very close to the most recent highs in gold, and this is quite telling in regards to how the tensions are playing out and why or how gold is fighting that strong dollar in the markets. If at all we see gold going lower, then there are key levels we need to watch out for, and these include the demand zone that is next to the support area that you're seeing over there, and also back down to where we were in terms of last week lows. Those are key levels that we'll be looking at to see if gold breaks them, then we might start seeing momentum to the lower side. However, things at the moment are looking like though that uptrend is going to hold steady for some time, and this might make us start reaching newer highs, including last week's highs, and that is what we'll be marking to see whether we're going to approach that level. On the 1 hour, it looks a bit more choppy. We've seen a change of character, and now we have seen an attempt to reach towards the previous lows or the previous demand zone on the chart. So we'll be keeping a close look at this and seeing how it develops throughout the day. Having said that, thank you for tuning in to this session of the Market Watch series. If you're interested in trading any of these instruments, remember you can always visit hfm.com or see the description below the video, and see you in the next one.